This is my week in review, and it's actually a month in review, and it's actually the end of the year, so I guess this is my year in review. I don't have much prepared to talk about my year, but if I look at 1 year, my returns, 3.76%, not super great. I mean, I've been collecting premium along the way, but the value of the shares and things that I've bought hasn't shot up too much. I've added a ton of money to this account. I had built it up to 40,000 and then sold some property and dumped a bunch of the equity in here. I also dumped some of my equity into a Vanguard account and putting that down on a long-term VTI, which is the total stock market index. And Vanguard has very, very low expense ratio, so it doesn't cost much to maintain it, and that'll just grow long-term. And my plan is to, in this account, take the premium from what I'm making here and dump it into VUG. It's another Vanguard account, but this one's towards growth. So I'll dump some of that here, and I'll dump some of that into my VTI and my Vanguard brokerage. And then I've been playing with some of these high yield, and as of late, the market's been down. So some of these are below. They lost a little NAV, and I'm considering just dumping all these because they're doing what I'm doing. Just paying someone to do covered calls and cash secured puts and things like that. So I don't know if these are good long-term hold. It's going to be Vanguard for me. Anyways, what's been happening this month? I've been doing I've been mainly focusing on covered calls against my Leaps options for IWM. I've had 2 contracts of Leaps options on IWM. So instead of buying the shares, I use the Leaps options to act as ownership of 100 shares. So I've got 2 contracts, and I'm able to sell daily, 2 contracts per day at a pretty good delta, and they don't seem to go into the money. So the value of the contract every day goes down to like $1.03. So times 2 contracts, I buy these back for $2.06. So like this one started out 48, bought back for $2.06, ended up with $45.94. Next day, same thing. Next day, same thing. So just daily, I watch this. There was one day where the price went against me. Where is that? This one here. Sold to open this call for 102. The price was starting to go against me, so I bought these back for 104. So I lost $2.06. And that's really the only time this month that IWM has gone against me. So what I also did, I've got my Leaps contract here. I did, since this is going pretty well, I did purchase 2 more. So now I can do 4 contracts. You can see here towards the end of the month, I was doing 4 contracts, so 400 shares here. And so I picked up 2 more at a lower strike price, and because the price had gone down. My first Leaps option, the price had gone down. IWM has just gone down in general. IWM has gone down, quite a bit over the past month. It really dropped right here, and hopefully it's going to make its way back up. 1 year, the return on this is almost 9%. 5 years, it's gone up 33%. So overall, this is 2,000 companies in the Russell 2000 index, and it's out of those companies. There's not one company that's going to bring you down if it goes bad or something happens to that one company. So overall, this should go up over time, and I've got a year for these Leaps options to mature and go into profit. But this first one here, this trade, let's see, where's my saved trades? First one I did was this 214, and that's definitely down. If I look at my first Leaps, the 214, once I bought this, the stock went down, so I'm down $2,800 on this one. But like I said, I've got a year for this to come back and hopefully break even or go into profit. This should break even at 255.39, so it has to go up 15% for me to break even on that one. This other one I bought at the right time, I believe. So far with this one, I'm up at 120. So as this one goes, as the stock price goes up, this one will stay in profit hopefully, and make much more profit down the road. So if I look at this other one and option strat. Save trades, my 204 long call. It has to go up only 7.4% to break even, so it only has to go up to 238.90, and then I'll start making money with that. But in the meantime, I've got, for the ability to sell four. In the meantime, I've got the ability now to sell 4 contracts based on these leaps. So instead of the price of IWM is 222 roughly. So that would mean for 4 contracts, I'd have to spend about 88,000, close to 90,000, to have the ability to sell 4 contracts. But because I've got these leaps, I've only got 15,000 into this. So that's been working well overall. I did do a PLTR. I collected 109. This is a put. Bought it back for 20. Just kind of playing around with that. I got rid of my AI stock that was assigned. It's been kind of a dog. It's been, I've been holding the bag on this for months and months. Finally, the call I had on AI, it was 2 contracts, was called away, and I was able to get out of it at my cost. So that's good. It puts $6,000 back into my account to deploy for other uses. This SMCX, it's due to expire 117, but price has gone down recently, so I don't know. Hopefully this will go up. I kind of want to get rid of this one too, but we'll see. I got lots of time to play with this, and I can still collect a good amount of premium. If I look at options here, and I go sell call for 19 days out, the premiums are really good. At my cost, 48, I could still get $380 for this. So we'll see what happens at the on January 17th when this either expires, or I'll just sell more covered calls for some good premium on that. So like I said, if I sort this, generally selling covered calls on IWM, and I've also been acquiring NVDA. If I sort this and I look at all my IWM trades, here's the premium I collected, the buybacks, so the result is here. If I look just at IWM, I've collected 1,127 on an average of 62 per day. So hopefully this will double now that I'm doing 2 contracts, and I'll do 2,200 a month, and I'll do 120 or so per day. Looking forward to that. And then for my NVIDIA, my total for NVIDIA collected is 34.12, average of 227 per day. And then I got these other couple. I did do a SPY this month. I collected 76, bought it back for 11, so I ended up with 65. So with NVIDIA, I've been assigned 400 shares. I've been selling calls on that. Also got assigned on a set of 200 shares. I've been selling calls on that. And I had a 400 and a 200 expire same day. So now I'm consolidating that, and I'm doing everything with 600 shares all at once. You can see my latest trade here is for 6 contracts. So this latest one, I collected 101 times 6 contracts. So that's $600. And this is a weekly expiration. So if I can keep doing this and collect $600 per week, I'd be totally happy with that. So as far as dividends, I've collected $296.38. Interest I've collected is $56.40, and I paid a little bit of margin left over from last month. I've decided I don't want to use margin anymore. It's just I don't need to, and it's too risky, and you can get into trouble. So I'm just going to avoid that. But this is the tie over from last month. So total collected $57.26. By far my biggest month ever. Of course, I've got a lot more money to work with, and I'm hoping to find ways to bump this up to maybe $10,000 a month. I might add some more money to this account to facilitate that and reach my goal. If I can make $10,000 a month, I might consider leaving my job. We'll see. I'd like to make $12,000 actually to leave my job, but $10,000 I could probably do it. If you want to see my thought process for purchasing this other 2 leaps options, then stick around to the end of the video after this, and you can see my thought process going through there and why I chose those. I've dumped some of these high yield ETFs, and SPY I still kind of like. QQQI I had Oh, QQQI is here. Let's look at those. These are the NEOS. NEOS actually seems pretty good right now. Oh, the NAV is above my average cost, so that's good. This pays monthly, so last time I got paid for this was $12.51 on 20 shares, so 62 cents per share. That's actually pretty good. I'm probably going to keep this for now and see how that goes. That's QQQI. SpyEye, my average cost is $52.55. So the NAV's dropped a little bit, $51.54, and so I'm down $100 on that. This also pays monthly. So on 100 shares, 51 cents per share. That's $51.67 that I've received in dividends, and of course reinvesting that. So as long as the NAV doesn't go down too much, I'm going to probably keep this. But it takes a couple months of $50 dividends to just break even on this with the loss of NAV. So kind of souring on these ETFs, these high yield ETFs, because they're not really high yield if you're losing your capital. XDTE, QDTE, and RDTE, these are the round hill. These pay weekly. So the NAV here is down. I'm down quite a bit. So I'm down 27. I only have I have 12 shares. But let's look at how much this pays out. For on 12 shares, I made $7.53, and it pays out 60 cents on this. So I might just hold on to this for a while and just watch the NAV. And the whole market's kind of taken a dive a little bit recently, so this could be just following that trend. QDTE, similar thing. I'm down 42.52 is my average cost, and it's trading at 40.88, so I'm down there. I don't have too many shares with this. I'm just experimenting. So at this paid 80 cents per share, so with 10 shares I made $8.51. So that's really good, especially if it pays weekly. That's incredible. I'm going to probably hold on to this one for now. And this is the other one, RDTE. This is the newest one. We've got 200 shares of this. I've been kind of ramping up a little bit on it. And it paid 27 cents per share. But even that's good. If you can get it 27 cents per share weekly, that's amazing. So I'm keeping this for now. So I made $55.39 on that. Let's look at the NAV. Average cost $44.39, and now it's down to $41.33. So hopefully these will go up. Got some other ones here. Devo, I'm going to get rid of. I've got a limit order out. I like Devo. It's a good long-term hold. Looks like the NAV's gone up quite a bit, and I've got a queued up order to sell it if it reaches 42. So I've decided with this account I need to make income, and my long-term plan is to put in VUG and not spread myself too thin with other things like Devo that I like. Maybe long-term I can break out into individual stocks, but I'm not that educated yet on how to analyze each companies differently, different companies one at a time. So it's best for me just to invest in a low-cost fund like Vanguard, VUG Growth here, and then I've got a Vanguard account that I have $100,000 in VTI, which is the total stock market index, and Vanguard has just very low expense ratios. So that's about it. I'm having a really good end of the year, a good month here, 57.26. If I can just keep going with this, I'd be pretty happy. So let's stick around now to the end, and you can see my thought process if you want for purchasing these other two Leaps options, and that's coming up right now. Been trading with these Leaps options. I've got two Leaps options on IWM. I picked these up at 240 when the strike price, when the current price is 240. Picked these up for 214, expiring 126. Each one was $4,236. So there's two of them. Cost me $8,472, and I've been using these 200 shares. This acts as like ownership of 200 shares. So instead of IWM, where I'm spending $22,000 for each for 100 shares. I'm using this contract, this leaps option for $4,000 for each one to act as ownership of 100 shares. And I've been selling daily calls, IWM. You can see here if I sort this by this column, all these IWMs so far this month, I've collected $869, $867.25, average of 57 per day. So what's happened is IWM has gone down since I've done that. 240 is when I purchased this, and you really want to purchase these when they go down. So it's really kind of far down. I'm looking at the Bollinger Bands on Yahoo Finance. It's at the very bottom. It's a 90% chance of going up from here. If I look at my Robinhood Legend here, you can see it's also same thing. It's at the bottom of the Bollinger Band. So it's likely to go up. I'm tempted to, you can see the RSI is 32 here. It's oversold. It is going to go up more than likely. So I'm tempted to get a couple more shares of this. Let's take a look at the options, and let's go buy, call, and let's go out to the same date, which is January 16th, 2026. And I want to go deep in the money. Previously, it was at 214. You can see I've got 2 contracts there. And right now, if I bought this today, it would cost me $28.62 per contract instead of 4,000 some. And I can actually even go down more. And let's see. Let's go to like 205. And the delta here is 74, 75. That's pretty good. This would only cost me $34.48 for each one. If I plug that into option strat, expiring January 26th and the 16th, and if I go down to, what did I say, 205? It's only got to go up to up 8% to break even, and then I'll start making money on those leaps. If I look at IWM, past couple of years, it just happens to be down right now. But if I look at like past 3 months, it's down a little bit. Year to date, it's up 11%. Past year, it's up 9.1 or 9.5%. Over 5 years, it's up 33%. So chances are this is just going to keep going up, and you never know. But this is probably the best time to do this. I'm considering taking this risk, because then what I could do is I could sell 4 per day. So instead of 867, I could make 1734 per month if things go my way. You can see today the price kind of went against me, so I purchased these at collected 102, and the price started to go against me, so I just bought it back before it went too far in the money. So I bought it back for 104, and that's the only time this past month where that's happened. So on 12/2, I sold the one for expired 12/4, collected 48, and I've just been buying this back. It goes down, the premium the contract loses all its value. By end of the day, I'm just doing one day at expiration, and I just buy these back for 103 each, so times 2. So I collected this much each day, so I could double that pretty much. And I like the strategy so far. I'm new to this, doing leaps options, and I don't want to jump in too fast, but I think it's a good opportunity right now. It happens to just be down at this point, and that's a good time to do this. You're more likely to make money on your leaps options once they go up. All right, you know what? The indicators are telling me it's the safest thing. There's no better time to do this. It's down at the bottom of the Bollinger Band. RSI is down to in the 30, below 30, or it was yesterday, and now it's up a little bit above 30, but that's what you want to see. And it's the volume is has been increasingly red, but the volume has gone down a little bit, so it looks like it's maybe starting to turn around. So I'm going to go ahead and do this. I'm going to go out to and trade those options. Buy, call, IWM, January 2026, 205 strike price. Delta is 74. Continue. 2 of these. It cost me $68.96. Review. Good enough. I'll put that in my sheet. So before I paid $84.72, now I'm paying $68.96. Mostly because the prices of IWM has gone down. So that's $1,500 less. So again, if this goes up about 8%, I'll start making money with these leaps. And I've got over a year for this to go up 8%. And because of the Bollinger Bands, the way things are, it looks like it's definitely going to go up. And this is IWM. It's the Russell 2000 index. So these are, it's not one company that I'm tied to. No one company is going to take everything out. These are the mid-cap companies that are growing. So the chances are that this ETF is going to go up to the right over time. And we'll see what happens.